What's up, gang? So it's Kevin Clue, and I'm back with another YouTube video. So what am I going to be doing or talking about today? I'm going to be talking about my Forex strategy that I've used to pass an account and also blow an account. So if you want to pass your account and you want to blow an account and you also blow your account, you can use this strategy. So what has been going on my 25k account? I'm down about 1,600 and something. Although I just took a break from trading because of school. This is September, school just started, so I just had to say, let me concentrate on my books. I'm trying to load up the MT4 right now, so you're gonna see that I have lost 1,006 or 1,005. So I have like 1,006 left to the account due to the overall drawdown to the account blue. So let me show you how much I've lost right now on this account. Let me show you how much I've lost. So it's not been easy though. Yep, losing this amount, it's not really been easy. Let me show you. So far I've lost 1,594, and this is to show you that this is this 25k account that I've been losing. It's not 25k anymore, it's $23,413 that is left. I've lost 16. So that is what has been going on. I've really not focused about trading for you. I've not been really caring about it for the meantime. I just want to just calm my head, and when I'm ready, I'll go back into the market. And when I do back to the market, I'm going to be going aggressive. But for this period of time, I've been trading like $10, trying to flip it. I think I flipped $10 to $20. Then I withdrew. That's just what I've been going on lately. But I want to show you my trading strategy. So let's go to my PC. Peace out. Yo, what's up, YouTube? Yup, I'm back. I've already said this in my introduction, but let me say it again. So today I'm going to be talking about my Forex trading strategy. The strategy that I've used to pass my Forex fund phase 1, phase 2, got a certificate, and also the strategy I've also used to pass this my current 25k the first phase, but the second phase I'm blowing it. And this strategy, it does work. Although because of this period of time, my trading is not really good. I'm losing. It will feel as if I don't know what I'm talking about. I understand that feeling, like people like, this guy is talking about strategy, doesn't even have any evidence or anything that okay, Forex, yeah, I've gotten this from Forex, no better achievement. But this strategy, big Forex traders, they use it. It's a normal thing in the Forex market too. So let me show you what I know how to do. And as you proceed, you try to understand that Forex it's not really about your strategy. Although your strategy tells you, or your methodology tells you, okay, I want to buy here, I want to sell here. But there are other things like fear, greed, your emotions, your psychology, that even if you can call a trade, I want to sell, because of fear, you might not be able to click the buy or sell. I promise you, that happened to me a lot of times. Like you now see the thing just dropping and going in your favor. So let's not talk about now. Let's talk about this strategy. So as you all know, this is GBP USD. I usually trade, but I'm going to analyze other pairs though. But I also to just break down the fundamental technical side of trading. So let me show you. But I want to delete all these charts. I want to delete everything. Yeah, move 18 joints. Yeah. So this is GBP USD. I'm a day trader, so let me just go to I'll just go to the daily time frame just to see like an overview, so I have an understanding of what is currently going on. So let me zoom that in right now. So this is GBP USD. This is GBP USD. So looking at this from this power, looking at this GBP USD is selling. It is selling and is also somehow, will I say, consolidating. It's selling though, but it's selling. To me it's selling. To other people it might be consolidating, but to me it's selling. So one thing about this is, as it's selling right now, is what we call market structure. There are three types of market structure. Either is in an upward trend, which means it's buying. If it's a downward trend, which means it's selling, or it is consolidating, means it's just in one particular point, just going up, resting, or that's how we usually call it though. So for me, GBP USD is selling. So the first thing I usually do is to know the market structure. Yeah, I don't know the market structure. Yep, market structure. So, I don't know. Let me know. I don't want to use this. I don't want to use. Okay, this is good. So the first thing I usually do is to first of all know the market structure. Yeah, basically what is going on in the market right now, what is going on. And like I said, for me, GBP USD is selling right now. Everyone can see that GBP USD is on a downward movement. I want to even go like probably to a week so you see it much better. Yeah, look at it now. You can all agree now that GBP USD, it is dropping. It is dropping. No consolidating, it is dropping. So now I know the market structure. What will I do? I will target more of sales. I will target more of sales. That doesn't mean that there's going to be a buy in the market. There will surely be a buy. There will surely be some sort of retracement somewhere, but it will be more of sales. So after knowing the market structure or the structure of the market, what do I do? Yeah. And like I said, there are three types of market structure. We have the uptrend, that's uptrend. We have downtrend, and we have consolidation. Abi something like this. Yep. Yeah, uptrend, downtrend, and consolidation. So now we all have an idea of market structure now. So the next thing I do, then I use my trend line. Yeah, I use my trend line. Like I said previously, trend line is just a tool you use to just like show you the direction of the market. So now we know the market is dropping. We know it's dropping. So I'll just use my trend line like this to pick at least two peaks. Peaks mean at the highest point at which the market touch. For example, I'll pick this one. I'll pick this one. And I'll pick this one. Then I'll just say, okay, let's just assume the market hasn't gotten to this point yet. So I'll just assume that okay, anywhere it touches in this trend line, as it came here, as it touched here, it's gonna drop. Simple. So after you know the market structure, if it's dropping, then you use your trend line too. At this trend line should have at least 3 or 4 touches before it breaks. I said that before it breaks to the upside, before the market changes though. Although you see some kind of signs that will let you know, okay, this market is about to reverse, like candlestick formation, chart patterns, like that. So you also know some kind of things too. So first of all, we know the market structure, we know the trend line, we know how to use trend line now. Although I'm not like saying okay, go to the 1 hour time frame, go to the 15-minute time frame. No, I'm just talking about an overview, just my trend line, my Forex strategy. Yeah, just talking about that. I'm not going in like too in depth about the 15 minutes candle, the 1 hour candle. No. So after talking about my trend line, I now look out for what we call I look out for chart formations. Yeah, this is chart formations. So what are chart formations? I really don't know like a very very good meaning to it, but I'm just going to try my best. So chart formations, probably this is the chart though. So these candles, they sometimes they form a pattern. Yes, chart pattern. They form a pattern, and that pattern that they form, it tells you what the market is going to do, or it shows you some of the direction of the market, what is about to happen. So I want to talk about some few chart patterns. Yeah, let me go to Chrome right now. Yeah, let me go to Chrome. Yeah, okay, yeah, I already have here with me. So this is a chart pattern ebook that I used when I was first starting out. I'm going to leave this book in the video description. So we have continuation chart patterns and reversal chart patterns. So what are continuation chart patterns? You see everything is all the figures, so you can read all this stuff. But to me, continuation chart patterns are like chart patterns that tell you that the market is going to continue in this particular direction. For example, GPUSD now is selling. So there will be some particular chart patterns that tell you, okay, it's going to continue to sell no matter what. It's going to keep on selling. So what you have to do is on your own spare time, I'll leave this book like I said in the description, you come and you read about these chart patterns. And some pairs though, they have a specific chart pattern that works very well for them. Like I've said, GBP USD, let me go to the 1 hour time frame. But this one thing I don't like about going to the 1 week, it becomes so sketchy and all. What do I have to reset this chart? Let me see. Yeah, much better. Much more better. What was that trend line? Okay, the trend line I used before. Let me delete it. Remove. Oh, I've removed those stuff. So GBP USD. GBP USD usually forms, and if it's selling, if it wants to sell, it does this pattern called M pattern. It does M pattern. It does yeah. So GBP USD, the patterns that work very well for GBP USD, we have M pattern, which is called double top. We have W pattern, which is called double bottom. And I'm going to tell you what these patterns do. Then we also have head and shoulders. Head and shoulders. Let me only use this. Where is it for the keyboard? Yeah. Head. We have head and shoulders, and we also have is it index or inverse? Yeah, inverse head and shoulders. Head, inverse head, and shoulders. These are the 4 patterns that work very well on GBP USD. I've seen these patterns work number of times. M pattern. I want to make this a little bit big. It's like 32, yeah. So M pattern. Let's go in. Let's go to the past. Let me see. Okay, for example, this is an uptrend. Market was trending upwards. Like I said, you bring your user trend line too. So I want to show you where the market did why a W pattern occurred. Yep, see one here. They call it double bottom. Sometimes it might even be triple bottom. It might be like WW, 3 legs. This is a very, very clear example of W pattern. Then let's go to the book. I think should it be in continuation pattern or reversal pattern? I think it should be in reversal pattern. Yeah, you're gonna see here. Yeah. Yep, this is it, double bottom. So this means when the market wants to reverse, when it wants to go up, look at the double bottom here. I think they have triple bottom too. Yeah. Look at it. Exactly the same thing that occurred here. Okay, let's go. Let me look for another instance again. Okay, another one. Do my trend line. Market was once going up in this direction before. Okay, it doesn't matter though. Okay, this one failed. This was a failed attempt, but let's use this one. Yeah, this can also be a W2. Yep, this can also be a W. The W sometimes might not be that perfect like it, but it just give you that kind of shape like a W. Sometimes it's not always that perfect like a W. Like you can see this one is a W. And immediately prior to that, price went up, but not that much though. So there was something wrong with this trade. The trade doesn't usually go, it's not always correct, but most of the time it's correct, depending on where you see it. And also it's not advisable that you only like focus on using these patterns as your strategy. You just be like, okay, I've seen W here, let me buy. No, other things like you look at the market structure, you look at use your trend line to your W pattern, psychological level, candlestick formation. I'll go on to those things too, but I'm just trying to show you this particular W pattern that works crazy on GBP USD. Man, if I could just, I don't know, when I need the perfect examples, I'm not seeing them. Okay, another situation happened here too. Trend line. Was first touch, second touch, third touch. Let's zoom in. Okay, the same thing happened here too. This is also a W, but this W is like This W is the one leg is higher than the other one. One leg is higher than the other one. See? Went up, came down, and went up again. Yep. So you see your trend line, your candlestick formation, and the market structure. And at this particular point in time in GBP was in an uptrend. It was going up massively. Look at it was going up at this particular point in time. The market was going up. So if you use your trend line, the first touch, second touch, this is now the third touch. You know that with your W pattern, knowing the market structure, know that okay, it is going up, so the up movement is going to happen. You would have just gotten in for a buy at that position for a buy. You would have just gotten in for a buy somewhere here, and you would have made some money. At least, yeah, you would have made some money. Then also we have the M pattern. The M pattern works like mad. M pattern is what we're currently going through now on GBP I've gone so far. Yeah, the M pattern. So I want to show you a few examples of the M pattern. So if I use my trend line too, for example, yeah, you can see this is the first touch, this is the peak, is a peak, and this is the second touch. So I'm waiting for the third touch to come somewhere here and drop. So let me show you a clear example of W pattern. Let's go to 15 minutes. Let me see 15 minutes time frame. Let's see 15 minutes time frame. 15 minutes time frame. Okay. You see them in a lot of places. This is an M pattern. This is a clear M pattern. You would have sold. If you just put your trend line somewhere here like this, first, second, third touch, your M pattern, you would have just sold. You would have sold at this point and you would have made money. Yeah, look at M pattern here too. There are a lot of, we could go on and on for this, but I don't want to make this video too long. We could go on and on. That's M pattern. That's M pattern. Where again is M pattern? Where again am I going to see M pattern? I just want to keep seeing this pattern. Okay. This is a very big M. This is a very big M. This is a very big M. You see, but this M is one leg is taller than the other one. As you can see, one leg is taller than the other one. So what am I trying to say? I'm trying to say that when you do go on your chart, because not everyone is going to trade GBP USD. If you trade your USD, look at the charts. You try to practice like what really works on that chart. Is it W pattern or M pattern, or is it this particular pattern? Then if it replays more than once, then immediately you see that you just go in once. Trading is not really hard. It's just our emotions that are attached to the money we put in that makes it a little bit difficult. So I've talked about the M pattern. I also want to talk about inverse head and shoulders. No, head and shoulders first. Yeah, head and shoulders. I want to show you that pattern. Let me show you the pattern on the book. Reverse head and shoulders should be a reversal. Yeah, should be a reversal chart pattern. Yeah, so this is an example of head and shoulders. You're seeing this clearly. So I want to show you an example on the GBP USD charts. So let's go to 4-hour time frame. I think we might see better there. Yep. I think I did this on my previous video. Look at this. This is a very clear example of head and shoulders. Yep, this is a very clear example of head and shoulders chart pattern. Very clear example. Let me use my arrow to demonstrate and show you how it is. No, that's not what I want. Yep, you see, price went here. Price came down. No, yeah, price came down. Yeah, the price finally went up like this. Dropped. We tested this resistance, former resistance. No, yeah, before if I can. So, in better terms, when you see an head and shoulders, so for M pattern is a sell, it's a sell bias. Uh-huh. W pattern, if you see W pattern, you should buy. If you see head and shoulders, like this one I'm showing you, sell is a sell opportunity. And if you see inverse head and shoulders, I'll show you that one, we buy. So no one is telling you to cram all these things. Just that when all these kind of chart patterns happen, just know what is going to happen next. Is either a buy or a sell. And like I said this in my previous video, that my GPUSD was going to sell, GPUSD is selling right now. But now GPUSD just touched the resistance right now. So I don't know what's going to happen with it, but I'm not talking about that. So let me show you inverse head and shoulders. Yes, I don't make it too long. Inverse head and shoulders. Yep, this is inverse head and shoulders. You see, it's just like the opposite. You just turn it around. Yeah, just turn it around. So I want to show you in the chart right now. Where am I going to see inverse head and shoulders? I think I'm going to see one. This video would have been like 30 something minutes now. I haven't gotten to the part I want. Okay, inverse head and shoulders. Where am I going to see this chart pattern? Let me go to 1 hour time frame. Yeah, I think I'll see it. I think I've seen that part. Where am I going to see inverse head and shoulders? It's going to be a little bit difficult to search for this pattern. But let's see if I'm going to see it. Let's see. Let's see if I'm going to... Oh. This one that worked, but didn't work. So you just have to just train your eyes that when you see this pattern, so I pray I see one. That one is not too good. Look for a perfect opportunity to... Yep. I've seen one. So you just have to just train your eyes, and when you do see this thing, just know what to do. Just know what to do. So now this is an inverse head and shoulders. Inverse head and shoulders. So let me show you. You see? You see? Oh, but this one is somewhat different. No, they're the same thing. Yeah, they're the same thing. So if you see this kind of opportunity, you just go long. Yeah, look at it. This is the perfect one I'm telling you about. This is the perfect one. I don't know why it looks a little bit different on the... It looks a little bit different here, but on the charts, it's way different. Well, that's how it is though sometimes. So exactly like this. If you turn this, I believe if you turn this upside down, it will be like the head and shoulders. It's just the opposite. So if you see this kind of opportunity in the market, why not? You take it. You just, as you just see it, you just go long. Like I said, this inverse head and shoulders is a buy opportunity, and this is on the 15 minutes time frame. Although this was news, this was NFP. This was NFP, right? It was NFP. I remember this day. I didn't take the trade. I wanted to take the trade, but because of I don't do news. News has taken many people to village. I don't do news. So at that point, I'm looking if I'll see any trend line. Any trend line at that point. If I would have seen any trend line that would have made me to go long there. Okay, this is a peak. So if I draw this somewhere here. Yeah, I think I didn't really know where the market was going to go, because all this has not happened. All this from here to here has not happened. It's just from here to here that happened. So seeing me using my trend line, the first touch, second touch, although I don't trade the second touch, I wait for the third touch though. But I just gone long. Okay, since I didn't trade this the second touch, I didn't trade this touch, I would have traded this touch for a long bias. And you see, price still it went long, came down before it actually went long again. So that's the chart pattern. And also we need to talk about candlestick formation. Candlestick formation, it's really, is it that big? It's not that big though. Oh, I'm still seeing another big head. Yeah, look at another one too. This is another example of inverse head and shoulders. Very big example. Let me go to one day. That'll be better. Yep, look at it. Yeah, look at it. Very big example of inverted and shoulders. See, came dropped. Yeah, boom. Should be having an up movement of GPUSD, but GPUSD does what it wants to do. So, like I said, so now we should be talking about candlestick formation. So what are candlestick formations? What are candlestick formations? What are candlesticks in general? Say, what are candlesticks? So candlesticks are all these red and green lines. If I say red and green lines, red and green symbol that make us to analyze the chart well. This is a candlestick. This is a candlestick. All this red, all this green and red stuff here is a candlestick. Although you have the decision to make it to change your chart type. If you don't like the candlestick, you can be like, okay, you wanna change it to, you want to use lines, you want to use Akanachi candle, a lot of more stuff. You can decide it, but I use candlesticks. I'm gonna tell you guys what I know. I'm gonna be truthful. I don't really rely on candlestick like that, because I've seen many situations whereby I'm on a sell. I'll see like a doji candle, a strong doji candle. I will leave the trade. If I see any retracement, I'll leave the trade. After leaving the trade, price will not go in my favor more than I expected because of that candlestick. So I really don't rely on them like that, but you can add them to your confluences. And I have this book called the Candlestick Trading Bible. Yep, this was the man that invented candlestick. I mean, I don't know how to pronounce his name, whatever. So these are the candlestick you need to know. Doji candlestick pattern, dragonfly, gravestone. I do know this. I do know some of them though. Some of them, but you need to add them to your confluences because it's going to help you in trading technically though. I'm going to add all this stuff to the link. I'm going to add it to my description box so you get it. And it's for free though. It's for free. It's a PDF. It's for free. So it talks about it a lot. And you can also download this app on Apple. Let me show you right now. Not on Apple though, on Android devices. If you use Android, they call it Japanese Candlestick. JCP is like a game. Japanese candlestick patterns here. I don't know if they removed it. I don't know because they do remove. Okay, I think this is it. Is this it? Sometimes these apps they do. This was it was last year I used this app last. It's like they have removed the app. But you can also, if you don't like it, because this is like 168 pages of content. If you don't like it, you can just go on Apple, search for Japanese candlestick pattern, and you see all these apps that will teach you on how you should use it. I'm trying to look for an app that would be good. But the app I used to learn, I'm not seeing it anymore on Play Store. I don't know why. Okay, yeah, here it is. Here. Oh god. I'm also gonna leave a link to download this too. Yeah, I think I can share this. Yeah, I can share it. So I'm gonna leave a link on my YouTube for this pattern. If you can see, this is it. JCP. This is the app you should download if you want to know more about candlestick. So let's get back in. So let me delete this stuff, delete these two drawings. So in all what I've been talking about, like I said, if I want to look at the market, I do use market structure. After market structure, I use my trend line too. After trend line, I use I think candlestick. I said candlestick. No, sorry. Chart patterns. After chart patterns, I use candlestick formations. Like the doji candle. So you can know more about candlestick formations on that book and on the app that I showed you about, because I'm not really too good about it. I'm not gonna lie. So I can't really make much content from it. Then I use what we call psychological levels. This is the beast. This is the beast. This is the beast. This is the beast. So this is my whole. These are the things. This is my trading strategy. These are the things I check out for before I get in on a trade. Getting on a trade, yeah. So what are psychological levels? So psychological levels, brief one. I'm going to create another video on psychological levels, like mainly. But psychological levels are just round up numbers. Like look at them here: 1.2600, 1.2700, 1.2800, 1.2900. They are levels that psychologically us humans we can relate to often. For example, if you go to buy something, um, if you go to buy something, you like to round the number up. For example, if it's 978, you'll be like, okay, it's 900 or 950 or 975, like that. We're not used to saying odd numbers. We're just used to say round up numbers. Psychologically, humanly. So these numbers, banks and hedges, they pay attention to these particular numbers or a zone because that's where price reacts. I don't know if it works for other pairs though, but for GBP USD, it works like mad. Okay, let me use another example again. Okay, this is a 1 day time frame. Let me go to the 4 hour time frame. This video is long. This video is crazy long. For example, now I know the market is selling, right? Market structure. I want to use my trend line too. First of all, first peak. This will be my second peak. This will be my second peak. Then the third peak, which market price I'll now go in for a short around somewhere here. I will go in for a short in the 4 hour time frame. No, I'll teach you about time frame analysis later, but I just want to show you my strategy. So I'll go in for a short. I'll sell the market somewhere around here. So let's see. Let me show you this trend. This two. So now I know that I know the market is selling. I'll use my trend line. I'll now go. I'll use a line. I use a line to mark these zones. For example, I know that this must be close to a psychological level. It doesn't mean that okay, you must wait for it to touch a psychological level before you get in. No, it must be close to because you just have to just pay attention to those because something is going to happen in that zone. Let's see. Okay, this is 1.27. This is when the market started selling though. But this closest psychological level closest to the closest psychological level to this number is either 1.280 or 1.2800 or 1.27500. So you can choose anyone. You can even have these things that are like all over your charts. You see. Then let me do the other one. Let me do 288. 28. You see these two. You see this. Are you seeing these two levels? Immediately the market came here, it dropped. Immediately the market came here, it came to this 1.288, it dropped. I'm not saying that exactly at that point. No, I'm not saying exactly, but just pay attention to that zone. This one exactly at that point. If you had just gotten in there, you would have made money. If you had gotten in for a short somewhere around there, even if you got in here and you put your stop loss, maybe say 20 pips, although you'd have still lost money because no, let me say, yeah, if you had gotten here, you'd have lost money because price came up before it went down. But just pay attention to these zones because that's what I do. And they are 50 pips away from each other. They are 50 pips away from each other. For example, we have 28 on 1.288, 1.288. Then the next one will be 1. They are even here safe. The next one will be 1.28500. I use the draw a line, horizontal line. The next one will be 1.2900. Let me show you on my GPUSD chart, the main one where I do my analysis because I have a lot of them here. I have a lot of them all over my chart. A lot of them all over my chart. So what this helps me do is like an entry confirmation. If I see that okay, it is close to this place, it's close to this particular point where I want to get in, where I'm looking to get in, I'll go in for a short. For example, now let me show you the next place I'm looking to get in on GBP USD. The next place I'm looking to get in on GBP USD is somewhere here. It's somewhere here. If the market just starts coming up, comes to this zone, just touches this trend line, I'll go in for a sell. Well, like what are my confluences now? Let's use the market structure we've learned. First of all, number one, I talked about market structure. I know it's a downtrend. Two, I've used my trend line. The first touch, I am counting these two at the second touch though. I'm counting these two at the second touch. Although it depends on you. Depends on how you count on how you count yours. But I'm taking these two, this first, I'm taking these two as one touch. So now I'm expecting that price will come here and make the third touch. So we know our market structure, the trend line too. Then let's see if there's a psychological level close by. Let's see. I say I want to go long here. So this is 1.299. Okay, no, this is the box though. So I think 1.2600. There should be a psychological level here. Yes. At least close to that one. 1.2600. See, like magic. You see, like magic. Anyhow though. Like magic. So I'm just waiting for this particular point. If I see like any move to here, I see M pattern, I see my candlestick, my chart pattern, which is M pattern, I'm going short. I'm selling. So these are the things I look at for the market. These are things I look at before I get on the trade. So how do I do my time frame analysis better? So on the 4 hour, it depends on what I'm a day trader, so I only check the 1 day. I only go as far as the 1 day daily time frame. So the 4 hour, I just used to do like an overall analysis to see what the market is doing. Yes, I just to see what the market is doing in general. That's what I use the 4 hour to do. The 1 hour, I just use it I use it as the current chart of what is currently going on. Because it's possible 4 hour can be selling. Yes, they have had many situations. The 4 hour can be selling, but the 1 hour can be buying. So the 4 hour is just just to show me the generalized direction of the market. So the 4 hour now is telling me to sell. The 1 hour is also the current chart, also telling me okay. So I'll go on the 1 hour like this now. It's also telling me the same thing, that there's also going to be good. There's also going to be a sell. Then the 15 minutes is where I go in. Is where I look out for my M pattern, my W pattern. Is this like my, let's say, how will I put it now? This is the time frame which I take on most of my trades. It's the time frame when I take on most of my trades, 100% of my trades. If I want to go in on the trade, I come to 15 minutes. If I see my M pattern, my trend line strategy, my trend line there, my psychological level, I'm going short. For example, now the market is closed though, but let's use the trend line strategy now. So I'm taking these two as the first touch. This one, I'm taking this one as the second touch. It is possible that price maybe on Monday. So this is the first touch, second touch. It's possible, and I definitely know that when I want to get in, there will be a psychological level close by. So I will just wait for price to short anywhere in the trend line, anywhere. Because I'm drawing a box that is gonna touch, it does not mean it's gonna touch there. When price, I'm just trying to say anywhere in the trend line, anywhere the market touches, anywhere it goes to. If I see my trend line there, market structure is selling, I see my psychological level, I see my chart pattern, which is M pattern, I am going short fully. I am going short without no regrets. So I don't want to use only this thing for GBP USD. Let's also check UUSD, because I believe people usually trade. I think people usually trade UUSD, USD Japanese yen, and gold. So I want to use this for a strategy to like just do an overview, just do like a small analysis on these pairs. I don't trade them though, although I do look at them once in a while because although they are tempting. Then gold. So wrap up this video. Then gold. I think I traded gold which day and I lost money, and I'm like, never again. I won't try that. Gold is not for the weak. Okay. This UUSD. I have some analysis on it too, but I want to delete every single thing. Delete everything. I'll check who's messaging right now. Okay. So. Like I said, the 4 hour is just to tell me what is currently going on in the market. Sometimes if I find it difficult to actually know what's going on, I go to the 1 day to zoom out to see, okay, this is what is happening. So now to me in the 1 day time frame, Euro USD is selling. Euro USD is selling. To me, Euro USD is selling. That means the market structure of Euro USD is a downtrend. Then after that, I use my trend line. This is the first pick, the second. I said I don't usually go short on the second pick, on the second pick, yeah. So now we know that the market structure, we have used our trend line. I'll just wait. This is one day though. Maybe wait for price to actually come here. Then for it maybe it will now go up again. Then it's at this point I'll be waiting for a very huge sell in Euro USD. In fact, I'm just gonna leave this. I'm going to leave this like this. Maybe in the future I'll go back and be like, okay, this is what I said was gonna happen in Euro USD. Check it out. So that doesn't matter though. That doesn't matter for now. So I know the market is selling, right? This 4-hour time frame. I've drawn my trend line. Let's go to 1 hour. Let's see what's going on. So I know that for now we have sales. So now on Euro USD now, I'll use my trend line. First peak. First peak. Second peak. I won't lie, sometimes when I see the market, it just comes like this, touches small. I get confused. I'm like, should I take that at the second peak or the third peak? But I just feel like anything I just want to do, I just do it. For example, now I'll take this as the second pick now. That's what I'm taking that second pick. I'm taking that second pick personally though. So I'll just wait for price to just come, probably touch anywhere in this trend line, touches here. Then I will sell. And I promise that at this point there should be a psychological level close by. Let's see, there'll be a psychological level close by, okay? Exactly at what? 1.7500. Let me show you. So for my own analysis, sell Euro USD. Just keep selling and you make money. You see? So this trend line, knowing the market structure, trend line, this psychological level, candlestick formation, it works. So probably I'll just go in. I'll just go in for a sell here. Probably maybe Monday, going for a sell somewhere here. And price will just drop and go in my favor. I don't like trading Euro USD though, because anytime I trade this, I lose money. So if you know these basic things, they will help you progress much better in your trading journey. Yeah, your trading journey. And if you know, if market is going down, it has what we call lower lows and lower highs. For example, now this is what we call, this is a high. This is a high. This is a lower high. That means this high is lower than this one, right? Is the English correct? I'm sure you understand what I'm saying. This high now is lower than this one. Yeah, I think so. So there will be another one that will now come, maybe somewhere here in the future. And you can see that this one is lower than this one. So if it's going down, price is going down. If price is going down, has a downtrend, it usually creates lower lows and lower highs. For example, now this is a low. This was a low in the past, and this is a new low now. Look at now. This low is lower than this one. No, right? Or higher than this one. No, it can't be higher. You see, this low is lower than this one. This is higher than this one. So that's how the market will continue. They keep doing lower highs, lower lows, lower highs, lower. If it's on a downtrend, but if it's an uptrend, for example, okay, USD Japanese yen is always going up. This one is always USD Japanese yen. It always goes up. So for example, now this is a very good opportunity of uptrend. Very beautiful opportunity. For example, now if price is going up, let me go to maybe 1 hour or something, so you see it better. Look around like this. Go to 4 hour. So yeah, if price is going up now like this, price will create what we call higher high and higher lows. For example, this is a low. Come on, delete all this stuff. This was when I was starting out. I used to trade almost all the pairs. Yeah, so this is a low. This is a high. Then this is what we call a higher low. Why? am I saying this is a higher low? Because this is higher than this previous low. Same thing again. Maybe this one is not that high, sha. Let's use this one. But you get the concept. You get this one. This is what we call a higher high. This was a previous high, but this high is higher than this high. So anytime you start seeing, it's just like when you are climbing upstairs. You know the how staircases are, like this, like this, like this. You go up. If you are coming down like this, like this, you feel that's just it. So I've tried on this video, even though I really don't know how to teach like that. I need to improve on my teaching skills. Me, I know that I'm bad at it. And this is gold. Gold messed me up. What day was that? I'm seeing a sell on gold personally. I don't know what is wrong with gold. It just moves on its own. Let me see. Let me check this thing out. I think is it a sell? It might be a sell though. Mm-hmm. This is a clear example of. I want to show you. I want to play a clear example of when the market wants to change direction. Or should I say it? Or you know what? I'll just give you another video. I'll leave another video. I've shared too much information today, so I won't start occupying your minds with that. So that's basically it. If you can remember all the things I've spoken about, the market structure, your trend, yeah, if you can remember these things, market structure, your uptrend and downtrend, your trend line, chart patterns, candlestick formation, and psychological levels or round up number levels, you are good to go. I'm not saying you should use this strategy, but it works for me personally. So if you see any strategy that it's probably correlate to this, use it. Why not? As long as it works for you, please use it. And also know that all this strategy we're doing is not, it's going to make you rich, but you have to first master yourself, master your emotions before you start like seeing the big progress in trading. So this is the update I want to show you for you today. I hope you enjoyed this video. So make sure you like, comment, and subscribe. And I will not forget to leave all these PDFs in my description. So make sure you like, comment, subscribe, like I said. So yeah, peace out.